Joining me now, Toney, Plexo Capital, a CNBC contributor. It's nice to see you again. Welcome back.
Hey, thanks for having me.
How are you thinking about this space? It's a little dicey, to say the least.
Yeah, I think we're going to see a little more choppiness. There's so much concentration, particularly in the tech sector, some around the general excitement and exuberance around AI. So there's a lot of concentration in the Magnificent Seven. And so the more that we see those stocks have their gyrations, that's going to dramatically impact the overall market, given the concentration there.
It's tough. Like we generally don't care so much about crazy growth, and we're willing to pay some big-time multiple for that crazy growth. It seems we're having a hard time deciding what we're willing to pay for still amazing growth, but not quite as crazy as it was.
Yeah, that's right, especially for the near-term investor, those that have a shorter look, may call it 12 months or so. I think, longer term, again, I always say we'll often look back on these periods and see that these were tremendous buying opportunities. We've got so much momentum, I think, to look ahead and look forward to, especially given that we're now starting to see the tangible results of those early investments into AI, both on the Magnificent Seven side and shifting their models to serve their massive customer bases, as well as the actual enterprises that are incorporating AI, moving from experimentation to actual deployment on the customer-facing side and the operations.
Do you look at these and say valuations still seem reasonable?
So, I think, look, as a private market investor, when we look to the public markets for a little bit of guidance, we do see that exuberance, I think, still holding steady with the Magnificent Seven, given that those are the most obvious plays for the public investors in the AI space and to follow that trend. However, when we start to look a little deeper, what we see in the private markets is that we've had this massive valuation adjustment, which was due in most industries with the exception of AI, especially for the pure play AI models. So, look, I think we're still going to continue to see some exuberance on the public side, but I do think it's important for investors to look beyond the Magnificent Seven and recognize that trends like AI are present in other business models as well.
Well, what is the current state of the private markets then in tech?
Yeah, so in the private markets, we continue to see an emphasis shifting towards profitability, primarily on the defensive end of the spectrum. And on the offensive end of the spectrum, we're seeing a lot of excitement continued around AI. I would say in particular, vertical AI is going to be a trend to watch both in the private and the public markets in 25. So this whole concept around taking more specific solutions that have access to data around specific use cases and industries. One of the massive opportunities exists within healthcare, as well as other opportunities in financial services and legal.
Are we pushing off, though, the run of expected IPOs and things like that, the more that we ask questions about the current state of the economy? We hear about pipelines at investment banks being full and, ready to move, but just can't get that push yet.
Yeah, like as I mentioned, I think we had a conversation at the end of, or towards the end of last year. I was excited about an opening for a few companies in 24, but I continue to hold firm that it's going to take to 25, even 26, for us to get back to a nice, steady flow and what I would call a new normal. Now, that said, if I look back to the comment on vertical AI, I think that's one of the places where we're going to see a shorter timeline to either an IPO or massive acquisitions. When you look at a lot of these opportunities with vertical AI, number one, the market is moving exceptionally fast. I think faster than we even thought it would move 12 months ago. A recent report by Bessemer even talked about this phenomenon with vertical AI because these markets like healthcare, not only are they massive, probably up to about a $10 trillion opportunity, but they also provide the ability to create a moat. You know, what does that mean? Warren Buffett used that term moat first in business, going back to the medieval days when castles had moats around them. It speaks to defensibility. And I think in particular, when we look at a sector like healthcare for vertical AI, the benefit it has over a horizontal solution is the proprietary data. So because of the concerns around regulatory, privacy, et cetera, there's only going to be a few companies that will have access to that type of data to be able to truly produce a defensible solution or a solution that has a large moat around it. So those are the types of opportunities that if I were a public market investor, I would be looking out for, you know, what are companies like Oracle doing there? What are some of these other SaaS players doing that have existing massive customer bases that could make an acquisition of a vertical solution and immediately deploy it and have accretive cash flow?